Ladies and gentlemen, welcome back to the channel. Today we're diving into a dramatic story, one that blends geopolitics, monetary revolution, and a tale of David versus Goliath on the global financial stage. At its center, Ibrahim Traoré, the president of Burkina Faso, and his bold push to reclaim Africa's natural wealth, especially gold, and challenge the century-old dominance of the US dollar. Now, you might ask, could one African leader or movement born in Africa really shake the foundations of dollar supremacy? What if what we're witnessing is the first crack in the global monetary order, and what if that crack becomes a fissure, reshaping how trade, reserves, and power flow around the world? In this video, we will explore the developments in Africa at Traoré-S gold policies, proposals for new currencies, the dollarization movements, examine the status of the US dollar, its strengths and vulnerabilities, the pressures it's under now, compare the two trajectories, understanding how Africa's ambitions might intersect with US vulnerabilities, and finish with what this all means for the future of the global economy, for you, and for the balance of power. So buckle up. This is not just economics, it's a story of sovereignty, resistance, and a possible new order. Let's begin with Africa. Africa, the rise of a new gold standard. Picture this, a continent rich in minerals, with gold running through its soils for centuries. Yet much of that gold has been extracted under colonial or multinational control, profits siphoned out, reserves held abroad. But now, Africa is stirring. The narrative is changing, and Traoré is one of its protagonists. Traoré-S gold push in Burkina Faso. Ibrahim Traoré has increasingly asserted control over Burkina Faso's gold sector. Under his leadership, the government has nationalized previously foreign-owned gold mining assets, transferring ownership into state-controlled entities. A modern gold refinery is under construction, aiming to refine gold domestically rather than exporting raw ore. He suspended export permits for small-scale private gold production to clamp down on illicit smuggling and to ensure the gold export is tightly regulated under state oversight. Traoré frames these moves not simply as resource nationalism, but as reclaiming Africa's rightful assets and redirecting the value chain toward African hands. Now, some critics claim this is brinkmanship or populism. Yes, foreign investors bristle at expropriation, but the optics are powerful. A leader saying, "We will assert control over our gold, we will leverage it for our people, not foreign interests." African monetary innovation, the mineral-backed unit. Traoré-S approach is part of a broader continental push. Earlier in 2025, the African Development Bank floated a bold idea, an African unit of account. This is not a currency that will circulate like coins or banknotes, but a benchmark anchor backed not by foreign reserves, but by critical minerals, cobalt, copper, lithium, rare earths, Africa's comparative advantage. The design. Member states pool agreed quantities of mineral reserves, and potentially gold, to back this unit. Local currencies could be pegged or convertible to the at set rates, creating a regional stability anchor. Revenues from project earnings, for example electricity sold in local currencies, would be converted to revenue in or mineral equivalents to repay lenders. In effect, it echoes the classical gold standard. The currency has real backing in physical commodities, not just confidence or faith in foreign assets. The is meant to reduce currency risk, attract investment in infrastructure, and strengthen sovereignty. This is not the only experiment. In Zimbabwe, for example, the government launched a gold-backed currency called the ZiG, Zimbabwe Gold, in 2024, intending to stabilize a collapsed local currency. Though fraught with challenges, inflation, credibility, liquidity, these experiments signal a breaking out, a willingness to rethink money's foundations beyond the dollar. The dollarization in Africa. The is just one axis. On another front, many African countries are actively working to remove the dollar from their systems. More than 70% of Africa's external debt is denominated in US dollars, a major vulnerability. In trade agreements, Some nations are negotiating to settle in local or regional currencies instead of dollars. The push for regional monetary integration, for example the long-discussed ECO for the West African bloc ECOWAS, is part of the same impulse. Escape from dollar dependence. These moves are partly economic, partly political. African nations want greater control over monetary policy, less exposure to dollar swings and U.S. sanctions, and more leverage in international deals. In short, Africa is experimenting with a new kind of gold standard anchored in real minerals and sovereign control, not foreign debt. The United States, dollar dominance, ITS cracks and threats. Now let's switch to the U.S. side. For nearly a century, the U.S. dollar has enjoyed a near unassailable global role, as the world's reserve currency, the medium for commodity pricing, the centerpiece of central bank reserves, and the backbone of global finance. Why did the dollar achieve this dominance? Deep capital markets, trust in the U.S. political and institutional system, a large economy, military and geopolitical power, and the ability to run deficits financed in its own currency. What valet tilde copyright where Giscard d'Estaing once called the U.S.'s exorbitant privilege. But now cracks are appearing. Let's look at some pressure points. 1. Fiscal overstretch and debt overhang. The United States now carries a federal debt of over $40 trillion. Exact numbers fluctuate, but the scale is huge. This kind of indebtedness creates structural pressures. If bond yields rise, servicing costs balloon, investor confidence may fray. At the same time, inflation and monetary expansion have tested confidence in fiat currencies broadly. Even domestic savers debate whether U.S. Treasuries offer real value over time. 2. De-dollarization and the rise of alternatives. Globally, nations are hedging their dollar exposure. Central banks are buying gold aggressively. In recent years, gold has become one of the largest reserve assets, signaling distrust in dollar assets. The BRICS bloc and other emerging powers are building parallel financial rails, non-dollar trade settlements, local currency swaps, alternative payment systems. Legal scholars argue that dollar dominance is as much a legal structural regime as it is economic, and that challengers are crafting alternative norms and institutions. Some nations are already reducing their dollar reserves, others are insisting on local currency settlement. The momentum is slow, but the direction is clear. 3. Dollar weaponization, loss of trust. One of the unintended consequences of the U.S. leveraging the dollar for sanctions and financial coercion, freezing of foreign reserves, secondary sanctions, is that some countries now see the dollar as a potential liability, not just a tool. When nations fear their dollar reserves can be blocked or frozen, trust erodes. This is especially relevant for countries under strain or in geopolitical conflict. 4. Psychological confidence factors. Currencies rest on confidence. If enough governments, institutions, and investors begin questioning the permanence of dollar dominance, if they see alternatives gaining legitimacy, the psychological tipping point can shift. The dollar's network effect is powerful, but not infinite. Recent reporting suggests that trust in the U.S. and in the dollar is eroding globally, pushing discussions about a multipolar currency regime. Comparison intersection, how TRAORÉ'S gold standard intersects dollar vulnerability. Now we come to the heart of our thesis. How TRAORÉ'S gold standard paradigm is not just symbolic, but potentially destructive to dollar dominance, and a catalyst for a new global economy. Let's break it down. 1. Real commodity backing versus fiat dollar. The dollar is a fiat currency, its value rests on government decree and trust, not on physical commodity. TRAORÉ'S model, and the concept, harkens back to a commodity-backed system, gold, minerals. If enough nations begin to anchor value in real assets, the relative allure of the dollar weakens. 2. Regional monetary autonomy versus dollar hegemony. Africa's move toward regional currency anchors, pegging to mineral-based units, or arranging local currency settlements, directly competes with dollar-centered arrangements. Trade that once cleared through dollars might instead clear through African units or bilateral local currency. That changes the flow of dollar demand. 3. Decoupling from dollar debt. If African nations restructure their debt, issue bonds backed by gold, minerals, or hold reserves outside U.S. financial systems, their reliance on dollar borrowing diminishes. This reduces the systemic demand for dollars from emerging markets. 4. Narrative legitimacy shift. TRAORÉ'S copyright bold rhetoric. Reclaiming gold, rejecting dependency, forging an African renaissance. Shifts the narrative. The idea of the dollar as the world's anchor is challenged morally, politically, and symbolically. That legitimacy erosion matters in global opinion, which influences capital flows and policy. 5. Creating alternative financial infrastructure. If Africa builds vaulting, settlement, clearing mechanisms that bypass SWIFT, dollar rails, the integration of global finance can begin to fragment. This is already happening via BRICS initiatives. Now, is TRAORÉ'S copyright alone enough? But he is one node in a broader ecosystem of de-dollarization forces, BRICS, regional blocs, alternative payment systems, central bank gold accumulation. The collision of Africa's experimentation with dollar vulnerabilities in the US could lead to systemic transformation. Let's compare side by side. Factor US dollar system. TRAORÉ'S copyright, African gold standard model. Backing fiat, trust in US institutions, liquidity real assets, gold, minerals, sovereign control. Reserve role. Deep capital markets, global demand. Emerging regional reserves, local and commodity-backed reserves. Settlement dominance. SWIFT, US clearing, dollar trade invoicing. Alternative settlement systems, local currency trade, mineral unit anchors. Vulnerabilities. Debt overload, sanctions risk, trust erosion. Liquidity constraints, valuation challenges, external investment resistance. Narrative center of global finance, hegemon. Sovereign reclamation, decolonial economic paradigm. When these systems coexist, the trajectories clash. The more Africa, and others, shift away, the more pressure on the US dollar's centrality. Potential objections. Risks. Before we conclude, it's crucial to acknowledge the challenges. TRAORÉ'S copyright gold standard paradigm is ambitious but not without pitfalls. Liquidity and scale. Can gold, mineral backing support large-scale global transactions? The dollar system has massive depth and liquidity. Replicating that is daunting. Valuations and price volatility. Gold and mineral prices fluctuate. Pegging or backing systems to such volatile assets introduces risk. Credibility and trust. Countries experimenting with new monetary systems must earn trust. If the public and investors doubt the backing or conversion rules, the system might collapse. External pressure and sanctions. The US might resist these moves via economic sanctions, coercion, or tariffs, as has already been threatened for some BRICS moves. Technical institutional capacity. Building clearing houses, vaulting, settlement infrastructures is complex. Many African states lack such capacity, so regional coordination is essential. Transition friction. Moving from dollar systems to hybrid or mineral-backed ones involves conversion, legal, contractual, and debt renegotiation phases. Friction, resistance, and failure risk exist. But all these are manageable hurdles, and many already being addressed in design proposals, pilot projects, and political momentum. What this all means. A strong conclusion. So where do we end up? We are at an inflection point. The global monetary order is not immutable. The dollar's dominance, long taken for granted, is being challenged in ways subtle and overt. And Africa, with its natural wealth and rising voice, is asserting itself. TRAORÉ'S copyright gold standard experiment is more than a national strategy, it's a rallying point. If it succeeds, it could catalyze a fragmentation of the dollar system, with regional hard anchors backed by real assets competing. Lower systemic reliance on US debt, reducing the dollar's reserve demand. Greater monetary sovereignty for formerly dependent nations. A shift toward a multipolar currency world, where dollars, gold, mineral-backed units, local currencies, and new digital units coexist and compete. For the US, the warning is clear. Dominance built purely on fiat and institutional leverage has limits. Overuse of sanction power, debt overhang, and erosion of trust all chip away at the edifice. For the global citizen, what could this mean in practice? Cheaper, more stable local currencies in emerging markets, reduced exposure to dollar swings, currency crises, and external shocks. New corridors of trade through alternative systems, reducing transaction fees and dependency. A rebalancing of power ain't not just economic, but geopolitical aid toward previously marginalized regions. To be clear, this transformation is neither guaranteed nor immediate. The dollar will not collapse overnight. But like a mighty tree slowly cracking under stress, the fissures are forming. TRAORÉ'S copyright gold standard may not single-handedly destroy the dollar, but it contributes to the erosion of its moral, financial, and structural authority. So, as you watch the world in the coming years, pay attention to gold reserves, regional currency experiments, trade settlement shifts, and the rhetoric around monetary sovereignty. These are not side stories, they may be the front lines of the next financial revolution.